Hey guys, so in this video, we are going over 7 top crypto stocks that you should be considering if you want to ride this crypto wave. We've seen some incredible growth from cryptos recently, but did you know that there are stocks tied to the growth of cryptocurrencies? I've done the research and here are my findings on the top crypto stocks to buy today. Let's get started. The first stock on my list is the Amplify Transformation Data Sharing ETF, stock ticker BLOK. This is not actually a single company. This is an actively managed ETF that specializes in blockchain technologies. Right now, Block is trading at $49.38 with a 52-week low of $17.88 and a 52-week high of $62.94. They currently have net assets of $1.35 billion in this fund, a yield of 1.24%, and a year-to-date daily total return of 46.53%. If we take a look at the 1-year price chart, you can see just how much this ETF has grown. Just 1 year ago, it was trading at under $20 a share, growing significantly in the last half year, and since March, it's been hovering between $50 and $60. If we take a look at some of the top 10 holdings, we can see that this ETF carries companies such as MicroStrategy, PayPal, Square, Argo, Marathon, Voyager, Galaxy, Hive, Hut 8, and SBI Holdings. So if you're planning on not doing too much in-depth research into the financials and fundamentals of crypto-related companies, then perhaps one of the best things that you can try doing is invest your money into an actively managed, diversified portfolio of all companies related to blockchain tech. That's basically what this ETF does. One really important thing to know is that this ETF's expense ratio is currently 0.71%. The expense ratio, it's very crucial to understand in that the higher the expense ratio is, the more fees are taken out each and every year. So yeah, this 0.71%, it is pretty high, at least when you compare it to funds like VOO, but it is really a trade-off for a highly niched ETF. And another important metric to examine specific ETFs is the fund's AUM, which is assets under management. As you saw, this fund manages over $1 billion worth of assets, which is a very good sign that Amplify is a large ETF. That means that this probably has higher liquidity, and also they have an average trading volume of 1.3 million shares, which is also a substantial amount and enough to further consolidate the ETF's liquidity. So yeah, again, if you are more interested in diversifying your investment with many blockchain companies, then BLOK is a great bet. The second stock on my list is Coinbase, stock ticker COIN. This is an American online digital currency exchange platform for the purchase, sale, transfer, and storage of cryptocurrencies. So right now, Coinbase is trading at $256.76 with a 52-week low of $250.51 and a 52-week high of $429.54. So you can see this one has actually fallen quite a bit recently. Now, as of today, Coin has actually been trading for less than a month. Ever since the IPO, its price has pretty much gone down. And that could mean that right now could be a good buying opportunity. Coinbase has a market cap of $47.754 billion, and there really is not too much information about it because it is so new. We're also looking at a price to sales ratio of 45.16 and a price to book ratio of 36.64. Their profitability stands at 25.28% with a return on equity of 24.91%. And right now, Coinbase is sitting on about $1.06 billion of cash and a current ratio of 1.21, meaning that they have 1.21 times the current assets as they have current liabilities. By the way, if you guys don't know what any of these metrics mean, I'm gonna link below my how to invest in stocks video. It's basically gonna show you all the things I look for when looking at a company. On a scale of 1 to 5, 1 being a strong buy and 5 being a sell, Coinbase is rated as a 2 right now, and the average analyst price target is a staggering $481.29, which is almost double the current price of $256.76. The thing about these crypto-related companies is that they're demonstrating progress in counterintuitive ways. With Coinbase, this company is planning on closing its SF headquarters in 2022. Why? Because they have stated that ever since its inception, they've really wanted their employees to work remotely. And because Coinbase represents crypto, which places a big emphasis on decentralization, this company is aiming to follow the same principle of decentralization with their workplaces. I just thought that that was pretty cool to mention. I do think that this publicity move can increase public sentiment towards this company, and also the fact that Coinbase intends to function normally without an official or unofficial headquarters suggests that its planned and consolidated a system of largely remote employment that expects to work smoothly throughout the future. So there really isn't too much financial data that we have seen from this company. However, Coinbase will have its first ever earnings call on Thursday, May 13th at 2 p.m. This earnings call will be huge for the company's projections and price outlooks, so definitely check it out if you're watching watching this past that date. And meanwhile, analysts have published rough projections for the company's revenue with quarterly expectations of $1.8 billion worth of sales and earnings of $2.97 per share. These estimates would represent massive increases in each and every category. Given the rise in popularity and investments into the crypto space, it's really not difficult to imagine Coinbase being a key player in the crypto exchange market for the future. And while I'm a bit hesitant with the current price, I do think that it is a great long-term pick for a crypto stock. The next company on my list is Square, stock ticker SQ. This is an American company that specializes in digital point-of-sale transactions. So right now, Square is trading at $223.96 with a 52-week low of $69.58 and a 52-week high of $283.19. Their one-year price chart shows pretty steady growth from $75 1 year ago all the way to the low 200s right now. They have a market cap of $101.983 billion, a P/E ratio of 509, which is absolutely insane, and an earnings per share of 44 cents. They have a 5-year expected price to earnings growth ratio of 5.22, a price to sales ratio of 11.77, and a price to book ratio of 39.37. Their profitability sits at 2.24%, and they have a return on equity of 9.69%. They're sitting on about $3.85 billion of cash, and they have a current ratio of 1.88. Analysts currently rate Square as a 2.3, meaning it is a buy, and the current average analyst price target is $270.31, which is about 20% higher than the current price of $223.96. So recently, with the sell-off of the tech sector due to fears of inflation and consciousness of market speculation, Square has really been struggling as a stock. But a lot of analysts still project this stock to continue to grow. And one really big reason for that is that its services and platforms promote the transaction of Bitcoin. One analyst, Josh Beck, he predicts that Square will climb 30% in price because of its strong affiliations with Bitcoin. And note that Square is the hosting platform for the Cash App service, which allows users to transact in Bitcoin. And Beck found that over 50% of Square's survey respondents use Cash App. More specifically, Square's Cash App platform has experienced massive growth. It generated $5.9 billion in revenue in 2020, which was a 353% year-over-year increase, with a big portion of this revenue actually coming from Bitcoin trading. Cash App has 36 million monthly active users and over 100 million downloads. Of these tens of millions of users, 7 million users have the Cash App debit card, which allows them to transact money from their Cash App balance. And Square as a whole has also experienced a lot of growth with a gross profit of $804 million in Q4 fiscal year 2020, which would be a 52% year-over-year increase. Now, by the time you're watching this video, Square will have already released their Q1 fiscal year 2021 earnings. So hopefully the earnings were positive, but regardless of the outcome, Square has proven that it has successfully capitalized on the crypto boom. As more and more people use Cash App to easily transfer Bitcoin and other cryptocurrencies in the future, Square is going to continue to yield outstanding returns for its shareholders in the long term. The next stock on my list is Nvidia, stock ticker NVDA. This is an American tech corporation that manufactures and sells GPUs for all sorts of computing markets, including, of course, cryptocurrency mining. Right now, Nvidia is trading at $580.92 with a 52-week low of $301.32 and a 52-week high of $648.57. Their one-year price chart shows remarkable growth all the way from around $300 1 year ago to the 500s. And recently we did see a pretty big correction back in late February. Nvidia has a market cap of $358.873 billion, a P/E ratio of 84.19, earnings per share of $6.90, and a very, very small dividend yield of 0.11%. Their 5-year PEG ratio is 3.59. They have a price to sales ratio of 21.78 and a price to book ratio of 21.31. Their profit margin is pretty strong at 25.98%, and they have a very good return on equity of 29.78%. They're sitting on about $11.56 billion of cash, and they have a current ratio of 4.09, which is very high and very good. Analysts do like Nvidia, and they are rating it as a 2, meaning it is a buy, and the average analyst price target is $666.10, which is over 15% higher than the current price of $580.92. So Nvidia released its earnings for Q4 fiscal year 2021 2 months ago, and they reported a 61% year-over-year increase in revenue and a 53% year-over-year increase in net income. The company plans to release its next earnings on Wednesday, May 26th. So depending on when you're watching this, just be on the lookout for that, as it can be a major catalyst for a lucrative price jump. Now, in terms of the crypto space, Nvidia is making huge waves with its inventory. Specifically, about 1 week ago, they announced that they would once again start nerfing its RTX 3060 graphics cards. This means that the RTX 3060s won't be as effective when it comes to crypto mining. And what's interesting is that Nvidia tried nerfing these exact graphic cards a few months ago before an update that they released allowed crypto miners to bypass the limit and continue their crypto mining ventures. The reason that they're doing this is because the demand for their cards was so high that the supply became very limited for Nvidia's gaming consumer market, which is still their largest consumer market with an adjusted total quarterly revenue of $2 billion. It's also interesting to note that they have developed crypto mining processors, abbreviated CMPs, which are GPUs that are specifically designed for crypto mining. The Nvidia CMPs hit the market back in March and are projected to bring the company about $100 to $300 million of quarterly revenue. So as crypto mining becomes more popular and more accessible, it wouldn't be foolish to project Nvidia as being one of the leading suppliers of crypto mining tech. That's why I do think that Nvidia is definitely a worthwhile long-term crypto hold. The next stock on my list is PayPal, stock ticker PYPL. This is an American company that operates an online payment system for safe and convenient digital transactions. Right now they are trading at $252.02 with a 52-week low of $139.28 and a 52-week high of $309.14. We've seen massive growth with PayPal in the last year, going from under $150 per share all the way to the mid 200s, and yeah, we did see a pretty big correction in February 2021. They have a market cap of $295.937 billion, a PE ratio of 71.19, and an earnings per share of $3.54. Their 5-year PEG ratio is a pretty low 2.5, and they have a price to sales ratio of 13.69 and price to book ratio of 14.51. Their profit margin is sitting at about 19.59% with a return on equity of 22.72%. Right now they have about $13 billion in cash and they have a current ratio of 1.33. Analysts do really like PayPal and they are rating it as a 1.8, meaning it is a buy, with an average analyst price target of $310.55, which is over 20% higher than the current price of $252.02. So yeah, PayPal is one of the largest, most well-established digital payments companies. So it really should not be a surprise that this company is reputable and durable enough to be a solid long-term hold. They just announced their earnings for Q1 fiscal year 2021, and some key metrics to consider is that PayPal had 392 million active accounts, $4.4 billion of payment transactions, $285 billion in total payment volume, and 42.2 payment transactions per active account. In fact, this last Q1 was the strongest Q1 in PayPal's history, with outstanding growth in total payment volume and revenue. To me, I think it's really clear that PayPal will be able to sustain and grow its operations for the foreseeable future. And now relating to crypto, the key thing here is that PayPal recently launched a crypto checkout service allowing users to transact cryptocurrencies with millions of online merchants. It's not just limited to Bitcoin, and it also includes Ethereum and Litecoin. And PayPal clarified that this new crypto service would be available to all of its 29 million merchants within the coming months. The only thing that users need to do is to store their cryptocurrencies in their PayPal digital wallets. And beyond that, they're thinking about delving even deeper into the crypto world, as they're considering developing a stable coin, which is a form of cryptocurrency that is tied to a real world tangible asset like the US dollar. However, there is a lot of speculation about this news, but if it does turn out to be true and PayPal does go through with this development, I do think that this company may benefit massively. I will be adding more PayPal stock to my portfolio, and I really do think that this is a great long-term hold. The next company on my list is Advanced Micro Devices, stock ticker AMD. This is an American tech company that develops computer processing units. And right now they are trading at $77.89 with a 52-week low of $48.42 and a 52-week high of $99.23. If we look at their 1-year price chart, we see a huge boom in price back in July of 2020, and ever since then it's been relatively volatile, with its price now selling into the high 70s. They have a market cap of $94.638 billion, a PE ratio of 32.7, and an earnings per share of $2.38. Their 5-year PEG ratio is a very good 1.19. They have a price to sales ratio of 8.24, and they have a price to book ratio of 14.6. Their profitability is 25.24%, and they have a return on equity of 60.61%, which is very, very strong. PayPal is sitting on about $3.12 billion of cash, and they have a very strong current ratio of 2.51. Analysts are rating PayPal as a 2.3, meaning it is a buy, and the average analyst price target is $104.92, which is almost 25% higher than the current price of $77.89. So on April 27th, AMD reported $3.45 billion in revenue, which was a 93% year-over-year increase. They also had a gross margin of 46% and a net income of $555 million by the end of Q1. Compared to the previous quarters, these numbers indicate that this company is still very financially healthy. And more importantly, AMD has dug itself a moat within its respective industry. industry. Whereas a few years ago, AMD had trouble competing with one of its main competitors, Intel. And now it really is ahead in its production of computer chips, all thanks to the help of Taiwan Semiconductor Manufacturing's 7nm chip manufacturing process. Right now, they are having a bit of trouble pinpointing where they're going to go with the whole crypto mining market. So they are focusing all of their efforts on perfecting its computer chips and processors to ensure that its customers receive the fastest and smoothest computing experience possible. I do think that as cryptocurrencies boom and crypto mining is adopted by more and more people, miners will look to companies like AMD to build and power their mining tech. And for that and a bunch of other reasons that I went over, I do think that AMD is a great long-term hold. Okay, next on my list is Silvergate Capital, stock ticker SI. This is an American chartered financial services and infrastructure company. Right now they are trading at $97.41 with a 52-week low of $12.05 and a 52-week high of $187.86. Looking at the one-year price chart, we can see that they started the year super low, under $20 per share. They saw huge growth at the end of last year, and since then they've seen a lot of volatility and corrections. So yeah, definitely a bit of a riskier buy in my opinion. Silvergate has a market cap of $2.419 billion, a PE ratio of 57.17, and an earnings per share of $1.70. They have a price to sales ratio of 20.98 and a price to book ratio of 3.63. Their profit margin is 33.73%, and they have a pretty mild return on equity of 7.17%. Right now, analysts are rating this as a 1.7, meaning it is a buy, and the average analyst price target is $164.17, which is much higher than the current price of $97.41. Silvergate Capital has been in the finance industry for over 3 decades and has been profitable every single year for the last 2 decades. They are a company that has been trying to pursue the market of digital currency consumers ever since 2013. And recently, they've seen substantial growth in the amount of digital currency deposited and transacted within its services. They've also been able to strengthen their ties with the crypto space by using a custody service to hold Bitcoin as collateral for US dollar commercial loans. In other words, Bitcoin holders now have greater access to liquid capital without having to sell off their cryptocurrency. This is essentially a validation of cryptocurrency as its own autonomous asset that does not need to be exchanged for real money as collateral. They're also benefiting from its Silvergate Exchange Network, which is a payments network for clients who prefer digital payments and digital currencies. SEN, which was founded back in 2017, was one of the first of its kind and now includes exchanges such as Coinbase, Binance, and Gemini as some of its biggest customers. This is a significant asset of Silvergate Capital because it shows that while other major financial corporations are rushing to catch up with this crypto boom that has taken over the world, Silvergate has slowly and steadily networked with many of the biggest names already. As a result, they have a really unbeatable position in securing connections with other crypto exchanges that permit the ease of crypto deposits and transactions. In 2020, Silvergate reported $11.1 million in transaction volume alone. What's really impressive about Silvergate is its fierce commitment to the crypto space when it was still a very new and highly speculative market. I do think that it's a company that has really proven itself in the crypto space in the last 8 years. And while recently we have seen a lot of volatility, which makes it sort of a more risky investment, I do think that if you hold for the long term, this could be a great one to make some money with. Anyways, those are my 7 top crypto stock picks. Now, I'm not a financial advisor, so make sure you guys just take this video as entertainment purposes only, and really make sure to do your own due diligence before investing in anything. Just because a stock is on this list does not mean that you should just go out and buy it right away. I encourage you guys to invest a minimum of 1 hour per stock you want to buy. And if you have not yet already, make sure to use the links below to get your 2 free stocks with WeBull, 1 free stock with Robinhood, or $10 of free Bitcoin with Coinbase. Anyways, happy trading, and if you guys enjoyed the video, please hit that like button and also subscribe to my channel to see more videos just like this. I make a ton of content about personal finance, investing, and entrepreneurship. Thank you so much for your time, and I'll see you in the next video. Peace.